One, and we're live. Okay, what's going on, everybody? Welcome to Wolf. Happy Tuesday to everybody out there. Markets have been all over the place depending on where you're coming from. If you're watching from Wolf Financial, from the stock world, if you're coming from the crypto world, a little bit more choppy for Bitcoin, I'd say. But really excited to be chatting here with George from Value Sense. Value Sense is looking to, I guess you could say, democratize all the things that are going on in the world and make it a little bit easier for us folks to get great information, great statistics, amazing analysis, AI powered. It's amazing. It's a really, really, really cool platform. And I think a lot of people could benefit a lot, I would say, from using it. And I think the goal here is just to really give some of the power back to the people here. And so really excited to be chatting with George here. So George, I'll let you introduce yourself to the audience here on who you are and what you're building over with Value Sense.
Yeah, nice to meet you, Kate. And hello to everybody. Hello to Wolf community, to all the retail investors up there. My name is George. I'm the founder of Value Sense. We are a hedge fund quality analytics platform for retail investors. So in a way that Robinhood democratized stock buying, made it commission-free, we're democratizing intelligent investing, where just for all retail investors can have an access to an analytics engine that most powerful hedge funds have. And all the power to retail investors. I believe we deserve the best UIs, user interfaces, the best data, the best insights, and with the power of community, the sharing, insight sharing, we are the power to deal with. So that's what we're building. Happy to walk you through the platform, explain how you can gain value from it, gain value from Value Sense. It's in the name, so happy to do it.
Absolutely. And yeah, so I was wondering, so from like on a personal side, what were some of those specific pain points that you saw that led to the creation of Value Sense? And then also like what, yeah, I guess like, the main thing was like, what are the main things that you saw that you're like, there's a gap here. We have a real opportunity if we were willing to build it and work towards it and not scam people and do this correctly. What was that main pain point for you?
Yeah, to be honest, I was working in finance and investing, and all my life I was dealing with all sorts of data platforms. With analytics services, and they were mainly crap, and they charged a lot, and there were not many insights that you could have gotten. So the real pain that I felt was in 2022, where it was a market crash, like the be fearful when others are greedy, and greedy when others are fearful. Finally, I got the capital to deploy and gain some substantial amount of returns from it, but I just couldn't pull the trigger. And it was like the analysis paralysis, where you feel like you have all the information, you don't know what to do. And I understood that most of the institutional investors, this is the exact moment where they don't do extensive research. They already know the quality of the companies, they already know the strengths and weaknesses, and they look at valuation, and they look at and they look at the sentiment. And that led me to like an extensive research. So when they understood what to do with the data, I only started to do the analysis, and I was looking very deeply into two names, Meta and Netflix. And you remember the time, like back in the day, Meta was so beaten to death by the market with reality labs, with all that crap. It was trading at seven times free cash flow. And I can show it in the platform, where you just run a very conservative DCF, you run a relative value analysis, you see that it was so undervalued, it's just shameful. It was shameful not to buy Meta back in the day, because only the ads business could have gotten you a pretty solid piece of the pie. So it was one name. The other was Netflix, which was also it was fun times. Bill Ackman bought into Netflix, sold the first quarter after the first purchase. I believe it was the time when Netflix just showed a negative user growth and negative growth, and the stock was beaten to death as well. There was two names. We've built valuation models. We've been updating it every single day. We thought, damn, that's so much emotional investment that we put into it, and there got to be a way to automate some of the stuff, to have a 360 view of the whole market, because we spotted those names. We completely dismissed lots of other opportunities that we could have taken advantage of. Palantir, Hims, we completely missed that. Although could have been superb investments. Also, we didn't even have time to look into Nvidia, although we were fans of the stock, but we just completely couldn't make all the analysis that we structured for those two names. So we thought there got to be a better way, and we automated the understanding of quality ratings of a company. So how well it grows, what's the profitability, what's the financial health of the company, what about capital allocation? So all the basic stuff that you want to seek in a stock. So good growth, good health, great capital allocation, and solid momentum. Let's go, something like that. But if you have no tools behind you, you completely just. We can ask the audience, what about Palantir? What are the weaknesses and strengths in terms of growth, like capital allocation, profitability? You have no idea. You have no idea how it matches with the stock peers, with the whole industry. You may tell us some basic stuff, but the truth is in numbers. And our platform actually allows you to get the instant 360 view on the whole market, get the quality ratings, intrinsic value of the companies, all the unique data sets, such as KPI segments, all the investor relations materials, AI-powered earnings. And that's exactly how top institutional investors invest. They do even more extensive things, such as building strategies and stuff, but with AI, with wipe coding and stuff, we can empower retail investors to do that as well. And that's been the vision of ValueSense. That's why we're developing it. As you've heard, we've developed the first platform for ourselves, then shared with friends of friends, made it public. It went really good among X community, and we just continue to deliver the top product that we can.
Yeah, it's a great product. And George, if you want to pull up the site, I'd be happy to walk through it a little bit and show people what you mean when you're talking about some of these insights that you're able to see. And it's pretty cool. I mean, you guys basically built something and said, okay, hey, does this work? And then you iterated on that. And I think people can see in the design and the layout of this, that is pretty much how it happened. It's so well laid out, so simple to follow. Here it is pulled up for anyone who's looking to get in. And if you're on X, just be sure to click on the ValueSense account in the title, and you can go to their page and go straight to their site. If you're on YouTube, it should be down below in the description, but he should have it pulled up here if you're watching.
Yeah, I mean, I was just trying to explain our meta thesis, so how it just played out
Yes.
backwards, but how we can take the insights from the platform onwards. So it's like meta. Instantly, you have an understanding of a quality rating of the company, and we dissect it through growth, profitability, health, capital allocation, momentum. You can click on each one of here or here in our sections to get the full-blown view, how all those scores are calculated, all the charts and stuff. And another cool thing is that we also automated the intrinsic value analysis. So we calculate the DCF value. So we take basically what we're saying is that forget about stock prices, price targets, and what analysts are saying in terms of the price, because they can justify basically anything. But the meat and the gold, what they provide is the analyst estimates, the revenue estimates, the earnings estimates. And we take that, we forget about price targets. So we take the estimates, we plug it into the DCF model. And this is like a conservative view of a stock intrinsic value. We also run a relative value analysis where we look at different valuation multiples that can be applied to the company. We take the average of a median of a peer set and pull it into this analysis and get the relative value. And the average of those two is the intrinsic value. And the thing that we built is the historical intrinsic value. So basically, you can have a look at how historically the company was either overvalued or undervalued, and see here and look here. Here it was like what I was trying to explain. So back here, like November 7th, 2022, like Meta was 150% undervalued. Using the most conservative DCF you can come up with the modest relative value. So it was super undervalued. And look where the stock went afterwards. So even when the stock like grew so much, it went down. Even here, like in April, like a couple of weeks since Liberation Day, when the markets like tanked, it was 9% overvalued, and it's for big tech companies, it's nothing. So it was just one of the examples how we spotted opportunities like this in 2022 and decided that we need to automate this analysis for every single stock for a wide time horizon. And because once we calculated it the first time, we couldn't believe it. And we started to do this analysis every single time. And you can understand how doomed we were, how emotionally invested we were. And it was just super bad. If you want like an extensive analysis of intrinsic value, you can go to the intrinsic value section here. Here you see the overviews, the historical, all the valuation multiples. For instance, something like PEG ratio, all that. You have a DCF model. Another cool thing that we have a reverse DCF, which is already automated, and you can even insert your own assumptions here. Let's say you want a higher long-term growth, you want a lower or higher discount rate, and you can calculate the implied growth of a stock. So basically, reverse DCF says, forget about building your own model. Let's look at the implied growth of a stock and how well, what's the implied growth of a stock at current prices. So for instance, for Meta, the reverse DCF suggests an 11% growth rate of a free cash flow over the next 10 years. And historically, the Meta was growing something like that. So we can argue that even today, Meta is somewhat fairly valued based on reverse DCF. And you can play around lots of functionality that super hedge funds have, and we've just made it accessible to retail investors. So reverse DCFs, DCF models, relative value, it's all available. And it's just a small percentage of the value that you can get on our platform. Because as you could have seen that we put a lot of emphasis on the user interface side. Everything is in cool charts. We have lots of tabs that you can click and compare the metric of a company with the industry median, the historical averages, benchmarks, and that's all you have in terms of the stock analysis. If you want to go deeper into the numbers, you can click on financials. You have all the financials, all the tabs with income statements, all the ratios, everything that you can imagine. If you want something like Rule of 40, we got you covered even here. We even got the Rule of X that actually went viral on LinkedIn from the one venture capital firm. So we dig super deep, provide you with cool insights. And I forgot to mention, we also have KPI and segments data sets that are completely free for all different time horizons. You can check what is the revenue by product for Meta. You can look at operating income by product. So daily active users. You can also go to charting and plot charts with this. And it's all available to retail investors and available on valuesense.io.
Beautiful. And what other so for like other companies who have investment research platforms, what are some of those more features that I guess set you apart from some of those other ones?
Yeah, I'd say we continue to work. We continue to work where others just stop doing it. So, for instance, a stock screener, the most powerful, previously the most powerful and most famous was Finviz. It was super cool because it was accessible. It was free for the most part, and we like went into first principles what stock screener actually is used for. It's used for backtesting, to be honest. And for instance, here we can choose. I want companies with high rule of 40. Let's say higher than 70%, and I want whatever. I want companies with negative net debt. So we have like super detailed and specific criteria that you can screen stocks for. You can screen for quality of the companies. You can screen for undervalued, overvalued stocks, everything that you can imagine. So, for instance, if I click update, I get the it'll get me the stocks. I'll get the stock. I'll get the list of stocks. It will download right now. And then I'll also have here I have the list of all the stocks that met my criteria. Then I have the stock heat map that is exactly suitable, that is exactly matches the stocks that were screened for. Here I can also show a heat map by lots of other different metrics. Let's say within that stock selection, I want a heat map by price to earnings. It will get updated, and I'd say yeah, lots of expensive stocks, but there are some green ones that I can dig deeper. And lastly, another cool thing is the backtesting that shows you how that set of stocks, whether it outperformed or underperformed the S&P 500. So currently I see that my criteria underperformed. I can tweak some stock selection because it was like 165 stocks. If I get the list shorter and shorter, probably I have a chance to outperform the S&P. And it's just been, I believe I talk too much, but it was just one feature. It was just a stock screener, but provides you with so much value compared to what you have on the market. So mainly the competitors have just some stock criteria and just the stock selection. But even within stock selection, we have lots of metrics that you can compare the stocks to, and heat map, some other visualizations, and the backtesting feature. So that's what differentiates us in stock screener. So if you have any questions, I can ask here.
Well, I was gonna say, like, I really enjoy the UI here, the design of it. It's so simple. I feel like people of any age can understand it, can pretty easily maneuver it. It just feels comfortable. Do you think that matters when investors are trying to find a platform that works? Do you think a well thought out UI, like, is that something you guys spend a lot of time on? And are there other things that are coming up on the horizon that you're excited? Any platform features you're excited to roll out soon?
Yeah, I mean UI is super important because with tools like Cursor, Lovable, and stuff, wipe coding is a thing. To be honest, one of the features that we wipe coded like within a day was stock heatmap that I showed you, and our like small innovation was that let's put all the metrics that's super cool on the heat map. So usually it just returns one day, 1 week at best, some of that. But we put intrinsic values, we put quality ratings, we put valuation multiples, undervalued, overvalued, stuff like that. And you can put it on the heat map, and that's a cool thing. And we've just done it within a day. I believe in all days it could have taken you
Mm,
up to a week to do a simple thing like that. So it just shows you with wipe coding, the speed of execution is super democratized. If you're a team that knows how to build, wants to build, super motivated, that's building things is easier. So then there are two things that pops up on the horizon. It's first the taste, and then your unique insights. And here with Value Sense, we have a unique insight. We understand how to work with data, how to provide value-added layers of data, how to pack this data into UI that you can get advantage of this data. And so it's the first thing. And the second thing is the taste. It's the UI and how users like interact with your platform. Because I believe all the retail investors, they know Robinhood. Robinhood has an amazing UX, UI,
Yeah.
but the vast majority of platforms, brokers, analytics platforms, they have a very crappy UI, and it doesn't feel natural to use it. It just doesn't feel right. You don't want to do it, but if you can put it to something like super concise, where everything flows, that's the tools that like consumers love to use. Something like Spotify, where it's so natural. You just use it, and you just enjoy using it. So it's been the inspiration, and that's the motto of Value Sense, how we approach to building things. So it's like the taste, unique insights, how we can 10x the next competitor, and yeah, there are lots of other things that we are going to build, that we've recently built with this mindset, and lots of many other things that we're going to apply this mindset to.
Amazing. Amazing. Sounds great. I'm very much looking forward to it. I see Emp as well in the chat. George and Cade, what a crew. He says, what's going on, Emp? It's good to see you, man. Curious on how you think about this. So, could you speak to anything in terms of like integrating community-driven investing, social trading features that help boost engagement, that help get the word out there and strum up some activity and some energy around the platform?
Yep. So of course, like when you do the research, you don't do it in the vacuum. You want to understand, okay, that's my thesis, how it matches with the other people, and then there's like a tree, a decision tree. Whether you're a contrarian, you have a unique view that others don't. They're wrong, you're right, but it's just a matter of time, right? When it plays out, or where you think in terms of consensus, you want to understand what's the consensus and stuff. So investing should be social, of course. There are different like social features that other platforms have, such as like copy trading and stuff. I believe previously it didn't work right. There were lots of scammers with copy trading, and there are actually some really cool other cool platforms that do copy trading and do it right. You know the person, he puts his reputation to it, and it's mainly like hedge fund strategies, but packed in one button. And so you can call it the money button, where users just click on the button. They don't understand how the algos work, but they understand that the person behind it is super cool, and you can test it and then put more capital. So it's something that we are working towards. We believe analytics is just the first stepping stone. You either use analytics to your own advantage, you build your own analysis, you build your own conviction, and then pull the trigger, or you just feel that the strategies that you are provided with, they're fine, and then you put the capital to it. So in a way, it's a decentralized hedge fund that we're trying to build. So we built the first step, the analytics platform. We also integrated, we recently built your personal workspace that actually all the types of analysis that you do, you can build multiple watch lists. So for instance, here I have Undervalued high quality stocks, Max 7
Wow.
tracker, the new innovation, Gayman. If you don't know, it's Google, Amazon, Meta. No, we have to get it right. It's Google, Amazon, Yelp, or Y Combinator, but it's Yelp. Then it's Meta, Apple, and Nvidia. So it's Gayman tracker. And yeah, you can have a Gayman in a heat map.
Oh, no.
So yeah, it actually went viral on X, and I really
Did it
like the
really?
concept of like, yeah,
That's so
there's
funny.
it's a new Max 7 on in this. Well,
Okay,
yeah,
man. That's unreal.
you can also you can also save all the screeners that you've built. And here I have like a couple of stock screeners that I've done myself. Then all the stock charts that you also plotted, you can save them and you can like reuse it. So like we also built an amazing stock charting. It's completely free, unlike many other platforms that put those tools such as screener charting, um, many other tools under the paywall. We believe it's absurd. You should be able. So let me briefly check. You should be able to plot some charts with like any data that you want. Like it's super easy to do. Something like bam bam here there, and then you can customize the charts, plot the median averages. So basically all you need,
Wow.
and save it to the workspace. And then once you have all the charts, you can build your own dashboards that are like sets of charts, like combined by like, let's say, one thesis. So here I built a Max 7 returns and valuation dashboard, and it's just a couple of charts combined together.
Yeah,
So it's
I like
going
that.
to load. Yeah. And so yeah, it works something like this. And you can have multiple charts in a dashboard. And the beautiful thing, once we touch the social feature, is that you can publish all the work that you created to the public space. And here in public space, you can view the work of other content creators, of other researchers. So let's say here we have a user who done a stock screener of like stocks with, I believe, 1 month returns higher than 35%. Here it's a watch list of companies that I believe the big beautiful bill favors. Then some watch list on Uber and Uber Lyft watch list. It's just two companies in a watch list, and you can have multiple. You're not limited to the number of watch lists that you may have. So there are a couple of charts on AWS revenue and growth. If you can click it. So yeah, it's just a chart on AWS and revenue growth, and it's not done by you, but you can view other people's work, which is fine. And if you like it, you can click a star. So then it gets saved in a favorite section, or you can even save it to your own workspace and continue to do the analysis on it. So it's the public space. I believe that's how like the social investing, social research done right looks like. So we currently onboarding lots of creators on X, Reddit, from X, from Reddit, from YouTube, that are going to publish their work, and super excited for this feature. And yeah, we have lots of other things. For example, on Workspace, you can see that we have AI agents and strategies under like soon button. So we're going to have like lots of AI agents that are doing a very specific task, but they will make your life as an investor super easy. Something that it's super hard, or I should say unnecessary to do via software, but we have the data, we have the tools, and with AI agents, we can be able to produce with the result that you want. So for instance, there will be an AI agent that builds you some custom metrics or does the super deep analysis on metrics or compares the stocks on the dimensions of analysis that you wish for, or the agent that looks into companies 10Ks and looks for supply chain and gives you the full-blown analysis. So it's not like the chatbot, which is not the interface for the analytics platform, but the super specific AI agents that do the task. And the last thing is the AI strategies with the portfolio tracker that we're going to build. So in a way that we built our own platform, we're going to build a portfolio tracker and release it super soon. And also embed some strategies that you can click in one button. So you'll have all the analytics of the strategies, how they performed. You can test them with the very small amounts of capital. And if you are ready, you can pull the trigger and start like investing as a hedge fund. So I'm actually super pumped to have Figma on the market, because some of the strategies that
Wow.
we'd love to build is the asymmetrical strategy of Figma long and Adobe short. And you can imagine that hedge funds have this ability to screen for strategies, to backtest them, understand where the gold is hidden, and with value sense you'll be able to do absolutely the same. And that's the level of democratization that we're looking for. So it's not just words, but the actual work that we put in and show to retail investors.
Wow, that was very cool. That is going to be a awesome feature of the platform, and definitely for people who are watching, if you guys are into this, if this is making sense to you and it sounds like you'd be interested, definitely go and click the link down below on the tweet below us, or just go to the Value Sense account and go to their page. If you're in YouTube, description down below, and you can sign up and get started. Um, are there, by the way, actually, go ahead. It looked like you wanted to jump in with something.
No, to be honest, no.
Oh, okay. All good, all good. Was there? I know we only have a couple minutes left here, but are there any specific stocks out there that you find lucrative right now that you've been paying attention to, that you've been using Value Sense to sort of dive a bit into over the short term here?
Yeah, I mean, I've been following HIMS for quite some time, and like we can briefly go through analysis how it can be done. So, like in
Yeah.
terms of quality, it's a high quality stock, has a good growth, profitability, shows great momentum. For instance, I was slightly concerned with capital allocation, but once I saw the charts with return on invested capital, so it was all trading up, and I really liked that a metric like return on invested capital minus weighted average cost of capital was super positive, and it trends in the right direction, I'd say.
Hmm.
So I was really happy to see that, and yeah, that's how like the scores work. So we look at different metrics, and then the score is calculated. In terms of intrinsic, I was actually trying to understand the intrinsic value of HIMS and how it's calculated. So I was actually looking at it those times where the intrinsic value line was at the same level with the actual market price. And here I was like looking, hesitating. I was trying to understand what the company does. Then it just skyrocketed here.
Absolutely
Then
sent. Wow.
yeah, then I almost made the classic mistake of selling high, of buying high and selling low. I didn't buy. I thought, damn. I mean, I'm stupid enough. Like I was trying to do the analysis here, like when it was just before the growth, and then it skyrocketed. I thought, no, I don't want to be an idiot. And actually, with stocks that have such a great momentum, you can see that the momentum was superb. It's either you buy or you just and you continue buy and hold, or you understand that it's an end of a cycle. And here I don't remember the news sentiment, um, but I didn't pull the trigger. So back in the day, so it was down, 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 down. Here I again started looking into it, and here I was a bit more convinced. So I actually bought HIMST around here. So I didn't buy or sell. So I'm just slightly like 20%, actually 15% on my position here.
Nice.
But I'd say if we look at the reverse DCF and we put some assumptions there, HIMS can be actually relatively fairly valued. And the sentiment that they had from the recent Novo Nordisk situation, I believe it's not justified. So yeah, here with the reverse DCF. So if you even play with numbers, and if you play with normalized free cash flow margin, with long-term growth rates, so this like 13% revenue growth is reasonable for HIMS, but it can actually go even lower. And considering how HIMS was growing historically and its ability to continue to grow We can plot some charts on subscribers and stuff. I'd say they have such a high momentum. So I'm on the hype train for sure. But I build my conviction on numbers and stuff,
Yep.
and like lots of other analysis that can justify it. So yeah, that's how actually I used value sense to spot themes like that. But I also used the stock screener to briefly understand like what are the high quality undervalued companies, what are the companies that trade like within a reasonable valuation multiples range, and then I go deeper. So actually, our stock screener is super powerful to as a first at the first entry point to the platform, start to get like more stock ideas, save them to the workspace, share it with in a public space to get the feedback on. So yeah, I mean that's how you can use value
Awesome.
sense, take advantage of the data of the market.
That was amazing. Super, super quick example too. And I think there's a ton of different ways that people can use these to aid in their investing journey and hopefully get better and better and to continue to build that skill set and continue to put in the work to find these hidden valued or hidden undervalued assets for other people too. George, this is a really, really cool platform you're building here. I appreciate you for making this. I think there's a ton of value here, and I think a lot of people can take something from this. So I hope people go and follow Value Sense and follow the platform, check it out. And if you're in Wolf Financial, I think there's a ton of value here, of course, because you're in the stock world. If you're in the crypto world, I think especially with Ostium, you got a lot of people are trading all assets now. No better time to find awesome platforms with really cool stuff. So George, thank you so much for coming on. Is there any final things you want to say to the audience before we wrap?
I appreciate it. I mean, all the power to retail investors. Wolf community does an amazing job to educate people, to enlighten them with great tools and functionality. And I'd say content plus software is the best combination. And the crowd wisdom that we have on X, on other social platforms, it's the best thing. If you want to get into more into data, have a view of the market like hedge funds have, go to Value Sense. We have a July 4th promo, 50% off, which you can take advantage of. And like for just $60 per year, it's like a couple of cents per day with our platform. You'll definitely make up for that. So all the power to you guys, and yeah, happy to appear on the podcast like this. So thank you very much for your time, and see you.
Absolutely. Right on, man. Well, listen, everybody, we'll catch you guys all in the next space or stream. We do and try to do them every single day here at Wolf. Catch you guys all in the next one. Happy investing and have an amazing rest of your Tuesday. We'll see you later.